Welcome back to the Deep Dive.
It's great to be here.
This time we're going to be taking a look at the Bogleheads Guide to Investing.
Okay.
You shared this with us. And looks like you're ready to make your money work for you,
Yeah,
which is a goal I can definitely get behind.
absolutely.
We're joined by Olivia Smith,
Hi.
who can help us break down some of the key takeaways from this classic investing guide.
Yeah, happy to be here.
So right off the bat, this book had me hooked
Okay.
with its concept of these different financial lifestyles.
Right.
Borrowers,
Yes.
consumers,
Mhm.
and keepers.
Yes.
Which one resonates most with you, like right now?
Well, I think right now I'm kind of a mix. You
Yes.
know, I don't think I'm a borrower, but I definitely have some consumer tendencies in me for sure.
For sure. Yeah.
But, ideally
Mm.
keeper,
Right.
right?
Oh, for sure.
That's the goal.
Yeah, I think that's the goal. That's what the book is
that's
reaching towards,
Yeah.
exactly.
Yeah.
And for anyone who isn't familiar with these terms,
Yeah.
borrowers tend to be those folks that are relying on credit for instant gratification.
Yes.
Whereas consumers might own their things, but
Yeah.
they still find themselves living kind of paycheck to paycheck.
Right.
And then we have the keepers who are prioritizing saving,
Yeah.
investing wisely,
Living below their means.
and living below their means. Yeah.
Yeah.
And it's not about
Which is hard.
judging. Right.
It's hard.
Yeah, it's not about judging where you are.
It's just recognizing
Mhm.
where you are and then
Exactly.
where you want to be.
It's setting those goals for the future.
Yeah, and it's a journey,
Yeah.
right? It's not like you
Totally.
flip a switch
Yeah.
and suddenly you're a keeper.
Right.
It's a process.
It's a process.
It's a journey.
Yeah, and it's it's a mindset shift as well. This leads perfectly into the book's emphasis on saving,
Yes.
which is like a huge part of this.
Yeah.
I was particularly struck by the concept of paying yourself first.
Oh, yeah.
Have you found that to be effective
Absolutely.
in your own financial journey?
Automating that savings is
Yeah.
key.
Yeah.
Take the emotion out of it.
Like,
Take the
yeah.
decision-making out of it.
Exactly.
Yeah.
Just set it and forget it.
Exactly.
Yeah.
And the book also talks about the power of compounding, where your money is
Yes.
earning interest on interest over time.
Like a snowball.
It is a snowball.
Right.
It is
The earlier you start,
Yeah.
the more time it has to grow
the better.
exponentially.
Yeah.
I loved that story
Yeah.
about the Vanguard shareholder
Yes.
who became a millionaire on a modest income.
Just by consistently investing
Yeah.
over time.
Just by being disciplined
Oh,
and
that's the key.
yeah, and it's time.
Yep.
Right, time. It's not about starting with $1 billion.
You don't have to come for money.
Yeah, you
Make money.
exactly.
Like consistency.
Now, I have to admit, when we started getting into the different investment options,
Yeah.
like stocks,
Yeah.
bonds, mutual funds,
Mm-hmm.
I kind of felt a little overwhelmed.
Sure.
There's just so much to learn.
Yeah. And I think that's a common
Yeah.
feeling for a lot of people.
Yeah.
The goal is not to become an expert overnight.
Yeah.
It's just to start understanding
Right.
the basics.
So-
Yeah, and kind of the building blocks.
Okay, so let's just focus on stocks for a moment.
Okay.
What's your current understanding
Yeah.
of how they work?
Well, I know that you're buying a piece of a company.
Okay.
But honestly, I'm a little fuzzy on the details.
Okay, so they represent ownership
Yes.
in a company,
Yes.
but that's about the extent of it.
Pretty much, yeah.
I need a little help here.
So the book explains that
Yeah.
when you buy stock,
Uh-huh.
you're essentially buying this
Yeah.
small piece of a company.
Right.
And your investment can grow if the company performs well.
Okay, so if the company does well,
Yeah.
so does my investment.
Yeah, exactly.
Okay.
But it still seems a bit risky to me,
Yeah.
right? What if the company doesn't do well?
Well, that's where the concept of diversification
Yeah.
comes in.
Okay.
You don't want to put all your eggs in one basket.
Right.
So you spread your investments
Yeah.
across
Yeah.
different companies, different industries,
Okay.
and different asset classes.
Oh, so if one investment doesn't perform well,
Right.
then others might
Exactly.
pick up the slack.
Yeah.
Okay.
They talk about mutual funds being a great tool
Yeah.
for that.
Yeah.
Because they pool the money
Okay.
from multiple investors
Uh-huh.
so that you can,
To invest in a basket
In a
of stocks or bonds.
so it spreads the risk automatically.
Exactly. Automatically.
Yeah.
It does the work for you.
Okay, so that sounds like a less intimidating
For sure.
way to get started,
Especially for beginners.
especially for someone like me
Yeah.
who's still learning the ropes.
Totally.
Now, I think you mentioned this before,
Yeah.
but the book also dives into the importance of understanding inflation,
Yes,
which I think a lot of people just overlook.
they do.
And I'll be honest, I know it has something to do with, like,
Yeah,
prices going up,
yeah.
but I'm not sure I fully grasp the impact.
Okay, so basically, inflation erodes
Yeah.
the purchasing power of your money over time.
Okay.
So the same amount of money
Mm-hmm.
will buy you less stuff in the
Okay.
future.
Okay.
So your investments need to grow
Yeah.
faster than the rate of inflation.
Oh, so it's not just enough to, like, save money.
No,
It has to grow
it has to grow.
at a rate that, like, outpaces.
Well, paces inflation, yes.
Yeah. Inflation. Oh, that's a whole new way of thinking
Yeah, it is, yeah.
about my finances.
Yeah.
Okay.
And that's why investing is
Yeah.
so crucial
Yeah.
for building long-term wealth.
Okay.
You know, you're not just trying to like hoard cash.
Yeah.
You're trying
Or,
to,
like, you're trying to make it work for you.
yeah, make it grow.
Okay, so this is all starting to make sense,
Good.
but I'm still wondering,
Yeah.
like, how do I figure out
Yeah.
how much to save?
Yeah, it's a big question.
Yeah, chapter 6 with all its tables and calculations
Yes.
started to make my head spin a little bit.
I hear you. So what?
Yeah, it can be daunting,
Yeah.
but it doesn't have to be.
Right.
Like, they provide a lot of tools
Yeah.
to make it easier.
So what stood out to you most from that chapter?
Honestly, just the emphasis on having a plan.
Okay.
You know, it's not just saving randomly.
Right.
It's like figuring out what your goals are.
Uh-huh.
How much you need to save
Hmm.
based on your goals.
Okay.
Your timeline, all of that. Yeah. So it's like a much more strategic approach.
It is more strategic.
Okay.
Yeah.
So let's talk about a specific investment approach that the book advocates for,
Okay.
which is index investing.
Yeah.
Initially, it sounded kind of boring to me.
I hear that a lot.
Yeah. Like just matching the market.
Right.
But they make a pretty strong case
They do.
as to why it can be so powerful.
Yeah. And a lot of it comes down to recognizing
Yeah.
that trying to beat the market consistently
Yeah.
is really hard,
Yeah.
even for professionals. Like even people who do this for a living
Yeah.
have a hard time doing it.
So why do we think we can do it?
Exactly.
Right.
So index investing kind of embraces
Okay.
that reality.
Yeah.
And it's about aligning your portfolio
Okay.
with the market,
Yeah.
you know, rather than trying to like pick individual stocks
Yeah, yeah.
and time the market,
Right.
which is notoriously difficult.
But isn't there some excitement in trying to pick winning stocks?
It's tempting.
Right.
It's very tempting.
And outsmarting everyone else.
That's the gambler in us, right?
Right.
But yeah, the book really debunks that myth
Uh,
of market timing
Yeah.
and shows that historically,
Uh-huh.
index investing has
Mhm.
often outperformed
Okay.
actively managed funds
Over the long term.
over the long term.
So it's more about consistency
Yes.
and letting the market do its thing.
Exactly.
Yeah.
And it's a passive approach,
Yeah.
which,
I think I can get behind that.
yeah, it takes some of the
Uh,
emotion out of it.
yeah.
Yeah.
And I imagine index funds tend to have lower fees
Yes.
as well.
Yeah, because they're not actively managed.
Right.
So you're not paying someone
To pick stocks and all
yeah,
that.
yeah.
Okay.
So yeah, lower fees
So lower fees
means more money in your pocket.
means more money for me.
Exactly.
Okay, I'm starting to see the appeal of index investing.
Good. I'm glad.
The book also spends a lot of time talking about
Yeah.
asset allocation.
Yes.
What exactly does that mean?
So it's basically spreading your investments
Uh-huh.
across different asset classes,
Okay.
like stocks and bonds,
Yeah.
to manage risk.
Okay.
So it's about creating a balanced portfolio that's
Okay.
tailored to your specific risk tolerance
Yeah.
and your financial goals.
Okay, so how do you figure out what the right mix is?
So there are different approaches,
Okay.
but one guideline
Yeah.
the book mentions
Uh-huh.
is the age equals bond allocation rule.
Okay. What's up?
So it suggests allocating a percentage
Yeah.
of your portfolio to bonds
Uh-huh.
equal to your age.
Equal to my age.
Yeah.
Okay.
So the idea is
Yeah.
as you get older,
Yeah.
your portfolio naturally becomes more conservative.
Okay. Interesting.
Yeah.
I am definitely starting to see how much like thought and strategy goes into building.
It's not just throwing darts at a board.
Right.
Yeah.
It's not just like picking random stocks.
Yeah, it's not gambling.
And hoping for the best.
Exactly.
You know, it's about
It's very strategic.
informed decisions. Yeah.
Yeah. The book also had me cringing when I read chapter 9
Okay.
about the hidden costs of investing.
Yes.
I had no idea how much fees
Oh, yeah.
could eat into my returns over time.
It's huge.
Yeah. Yeah.
It's huge.
Yeah.
And a lot of people don't realize that,
Yeah.
these costs,
Right.
like expense ratios, turnover rates,
Yeah.
transaction fees,
Yeah.
they might seem small individually,
Yeah.
but over time they
Yeah.
compound.
All right.
And they can really eat into your gains.
So being a savvy investor
Yeah.
isn't just about
It's not just about picking the right investments.
the right stocks.
Right.
Yeah.
It's about being cost conscious as well.
Cost conscious, yes. It's very important.
So we've covered saving investment options,
Yes.
inflation,
Uh-huh.
diversification,
Yeah.
and costs.
Very good.
But there's still so much to unpack
I know, yeah.
from this book.
It's a great book.
What are some other
Yeah.
key points that stood out to you?
Well, I think one of the most important takeaways for me
Yeah.
is the book's emphasis
Uh-huh.
on understanding and managing your emotions
Okay.
when it comes to investing.
Yeah.
They dedicate a whole chapter to this,
Wow.
exploring how our psychological biases
Yeah.
can actually sabotage our investing success.
Oh, that sounds fascinating.
It is.
Yeah. Because I know I struggle with that.
I think we all do.
Right. Like when the market
Yeah.
dips,
Yeah.
I panic.
The fear sets in.
And then when the market's like going up,
Oh, yeah.
I get super excited.
We get greedy.
Yeah.
Yeah. It's human nature.
So how can we
Well, the book talks about behavioral finance,
Okay.
which is the study of how our emotions influence
Okay.
our financial decisions.
Okay.
And they offer some strategies
Which
for recognizing and mitigating
Okay.
these biases
Yeah.
so that we can make more rational choices.
It's all about taking a step back.
Exactly.
Right. And looking at the big picture.
Yes.
Not reacting impulsively.
Not reacting impulsively, yes.
All the ups and downs.
Which is hard to do.
It is hard to do.
What's so important.
Yeah, I can see how that would be crucial for long-term success.
Absolutely.
And this ties into another key theme.
Yeah.
Right? Which is the power of patience and discipline in investing.
Yes. Patience and discipline.
This is about having that long-term perspective.
Long game.
It's a marathon.
Yeah. Sticking to your plan.
Yeah.
And just tuning out the noise.
Tuning out the noise, exactly.
All those talking heads.
All the headlines.
Yeah.
All the,
Yeah.
doom and gloom.
It's tough.
Stuff.
But it's so important.
The Bogleheads are telling us it's worth it.
They are. They are.
Right.
They're wise.
They're wise. They're wise.
Yeah.
All right, we're going to take a quick break.
Okay.
And when we come back, we'll continue our deep dive into the Bogleheads Guide to Investing.
Sounds good. It's so easy to get caught up in the day-to-day
Oh, yeah.
headlines and,
Yeah, all the noise.
all the noise,
Yeah,
all the
yeah.
fluctuations.
Ups and downs.
The Bogleheads are reminding us that it's a marathon, not a sprint.
Yeah, exactly.
Yeah.
It's about playing that long game.
Long game.
And they really drive home that importance of focusing on what you can control.
Control, yes.
Right, like your savings rate,
Yes.
your investment choices,
Yep.
and just your long-term strategy.
Your plan.
Speaking of which,
Yes.
I was intrigued by their discussion
Okay.
of tax-efficient investing.
Oh, yeah.
It seems like a lot of people,
A lot of people.
myself included,
Yeah.
just don't give enough thought
They
to how
don't.
taxes
Oh,
impact
yeah.
their returns.
It's a big deal.
It is, right.
It's a big deal. And
Yeah.
they talk about,
Yeah.
using those tax-advantaged accounts,
Yeah.
like IRAs
Right.
and 401ks,
Right.
which are great tools for that.
You had mentioned earlier that you found the book's discussion
Oh,
of municipal bond funds
yes.
particularly insightful.
Yeah,
What makes them so special?
Municipal bonds generally offer lower yields than taxable bonds.
Okay.
However, they have the advantage of being tax-free.
Okay.
At least at the federal level.
Okay, so that's a big win.
That's a huge win.
Right, for investors.
Especially if you're in a higher tax bracket.
Right, okay.
Especially when you consider the impact of compounding over time.
Yeah.
Those tax savings can really add up.
It's like getting a bonus return.
It is.
Right, without taking on
without the extra risk.
Any extra risk.
Exactly.
Okay.
Yeah.
They also get into the difference between traditional and Roth IRAs.
Yes.
Which I always find a bit confusing.
I understand.
Yeah, so what's the breakdown?
So with a traditional IRA, your contributions are tax deductible.
Okay.
And then your investments grow, tax deferred, until retirement.
All right. And with Roth?
Roth,
yeah,
you contribute after-tax dollars.
Okay.
But then your withdrawals in retirement
Yeah.
are tax-free.
So it's all about timing the tax benefits.
Exactly.
Okay.
Yeah.
So Traditional,
Yeah.
you get that immediate tax break.
Right.
But with Roth,
Yeah.
you get tax-free income
Tax-free later.
in retirement.
Yeah.
So it just depends on your situation
It depends on your individual circumstances.
and your income level.
And your goals.
Yeah.
Yep.
Okay.
Yeah. So
This is a great example
it is
of how the book provides
the knowledge.
the knowledge.
But you make the decision.
Right.
For you.
It empowers you to make those decisions that
Yeah.
are right for your situation.
That's right.
Okay. Another topic that really resonated with me
Okay.
was their deep dive
Yeah.
into diversification in Chapter 12.
Oh, yeah.
It's one of those fundamental investing principles,
It is.
right, that everyone throws around.
Everyone talks about it.
But I don't think many people truly grasp
Don't.
what it means to have a diversified portfolio.
Right. They think it's just
Yeah.
owning a bunch of different things.
Right, exactly.
Yeah, but it's more than that.
So what are they getting at?
So they go beyond that basic advice
Okay.
of don't put all your eggs in one basket.
Right.
And they really delve into the concept of correlation.
Okay.
So basically, they're explaining why
Yeah.
simply owning a bunch of different investments
Yeah.
isn't enough.
To achieve true diversification.
So if all your investments are highly correlated,
Right.
meaning they tend to move,
In the same direction?
yeah, in the same direction.
You're not actually reducing your risk
Okay.
as much as you think you are.
Oh, that makes sense.
Yeah.
Like if you have a bunch of stocks from the same industry.
Exactly.
Yeah.
And that industry takes a hit.
Yeah, your whole portfolio could.
Your whole portfolio could.
Oh, sorry.
So they also talk about
Yeah.
the importance of international diversification.
Okay.
So investing in foreign markets
Okay, to spread the risk
to further spread the risk. Yeah.
even more.
Yep. Yeah.
They mentioned this concept
Yeah.
of R squared
Yes.
in relation to diversification.
Yes.
I'm not familiar with that.
So R squared
Yeah.
is a statistical measure
Okay.
that shows
Uh-huh.
how closely the performance of one investment
Yeah.
tracks the performance of another.
Okay.
So a higher R squared value.
Yeah. Indicates a stronger correlation.
Okay.
So basically, it's showing you
Yeah.
how closely these two investments move together.
So you could have a portfolio
You could.
with like a dozen mutual funds,
Right.
but if they're all,
But if they're all highly
Right.
correlated,
yeah, it's not truly diversified.
it's not truly diversified, no.
Okay.
Yeah, so true diversification
Yeah.
requires a more strategic approach,
Okay.
considering that correlation
Yeah.
between your investments
Uh-huh.
and aiming for a mix of assets
Okay.
that don't all move in the same direction.
That makes a lot of sense.
Yeah,
And it seems like it would be
especially important.
during times of market volatility.
Oh, for sure, for sure.
Yeah.
Speaking of which,
Yes.
the book spends a good chunk of time
Debunking
common myths.
common investing myths.
Yes.
Yes. One that stood out to me
Okay.
was the idea
Yeah.
that past performance is a reliable indicator
Oh, yeah.
of future results.
That's a classic one.
Yeah. Yeah.
Yeah, and chapter 13 really dives deep into this
Okay.
and provides a lot of evidence
Yeah.
that trying to predict the market based on past performance
Yeah.
is really a fool's errand.
Right. So what's the alternative? If we can't rely on past performance
Yeah.
to pick our investments,
Right.
how do we make informed decisions?
Well, the Bogleheads would say,
Yeah.
take a more passive approach,
Okay.
specifically index investing.
But isn't that kind of like giving up
Not at all.
before you even start?
It's not giving up.
Okay.
It's about recognizing
Yeah.
the efficiency of the market
Okay.
and aligning your portfolio with it.
So instead of trying to,
Pick individual stocks.
pick stocks or
Brand the market.
time the market,
Yeah.
you're basically just investing.
You're investing in a broad basket of stocks.
Okay.
That represents the overall market.
So you're capturing the market's average return.
Exactly. Which historically has been pretty good.
Historically, it's been pretty impressive,
Yeah.
especially over the long term.
Over long term. So it's
Yeah.
more about consistency,
Consistency, yes.
low costs,
Low costs.
and just riding that wave
Yeah, riding the wave of the market's overall growth.
of the market's overall growth.
Yeah.
How
It's not about trying to outsmart the market.
Okay. I have to admit,
Yeah.
I'm starting to warm up to the idea of index investing.
I'm glad.
It seems like a much less stressful approach
Yeah, it's less stressful.
than like trying to pick winners and losers all the time.
Exactly. And it takes the emotion out of it,
Yeah.
which would
Yeah.
be really helpful.
Especially during those turbulent market periods.
Turbulent market periods.
Yes, when everyone's panicking.
Yeah. Yeah, exactly.
Yeah.
And that brings us back to the importance
Yes.
of managing emotions,
Managing emotions, yes.
which we talked about earlier.
We did.
What are some concrete tips?
The book offers
One of the most powerful strategies
Yeah.
is simply to be aware
Okay.
of your own biases.
Okay.
Right.
Yeah.
So they talk about things like loss aversion,
Okay.
which is the tendency to feel the pain of a loss
Yeah.
more strongly than the pleasure of an equivalent gain.
Okay.
So we hate losing money
We hate losing money.
more than we like making money.
Yeah.
Right.
Makes sense.
And then herd mentality,
Oh, yeah.
which is that urge
Follow the crowd.
to follow the crowd,
Yeah.
even when it's not in your best interest.
Okay.
So, we see everyone else doing something,
Right.
and we think, oh, she'd be doing that too,
We should be doing that too.
even if it doesn't make sense for us.
Right.
So
Okay.
once you're aware of these biases, you can start to develop strategies for
Definitely.
mitigating their impact.
Okay.
Right.
So I know I'm definitely prone to.
Loss aversion.
Yeah.
I tend to hold on to losing investments
Oh, yeah.
for too long,
I've been there.
hoping they'll bounce back,
Yep. Yeah.
even when logic tells me
Logic says cut your losses.
to cut my losses.
Yeah.
Yeah. Very common bias.
Very common.
So what do we do?
Well, the book suggests setting clear rules for yourself,
Okay.
like a stop loss order.
What's that?
So that's an order
Okay.
that you can place with your broker
Okay.
that will automatically sell an investment
Oh.
if it drops below a certain price.
Oh, so you don't even have to think about it.
You don't have to think about it.
It's just done.
It's automatic.
Okay, so that's a way to
Take the emotion
take the emotion out of it.
out of it.
What other strategies?
They also emphasize the importance of
Mhm.
having a long-term plan
Okay.
and sticking to it.
Sticking to it.
Right.
Yeah.
Because when the market is volatile,
It's so tempting to deviate.
yeah, to make impulsive decisions.
To make impulsive decisions.
based on fear.
Yeah, but if you have that plan.
But if you have a plan
Yeah.
and you understand your risk tolerance,
Yeah.
you're less likely to be swayed by those
Plan.
short-term market fluctuations.
Okay, so it's like having a roadmap
It is a roadmap.
that helps you stay on course,
Yes, stay the course.
even when things get a little bumpy.
Exactly.
Okay.
Good analogy.
So we've talked about the importance of saving early,
Yes.
investing wisely,
Yes.
managing risk,
Uh-huh.
mastering your emotions,
Yeah.
and taking a long-term perspective.
All very important.
But what about the practical aspects
Yes.
of investing? Like actually choosing investment
Right, right.
and managing your portfolio.
So the book offers
Yeah.
plenty of guidance on those fronts as well.
Okay.
So they provide sample portfolios
Okay.
for different investor profiles,
Okay.
emphasizing their preferred approach of
Mhm.
using low-cost index funds.
Yeah.
To build a diversified portfolio,
Right.
and they even include a section
Yeah.
on rebalancing.
Rebalancing, what is that?
So rebalancing is basically periodically adjusting your portfolio
Uh-huh.
to maintain your desired asset allocation.
Okay.
So over time,
Yeah.
your asset allocation
Yeah.
can drift away from your target
Okay.
due to market fluctuations.
Okay, so rebalancing is a way to
You'll bring it back
bring it back.
to where it should be.
Okay.
Yeah.
And why is that so important?
So it ensures that your portfolio
Uh-huh.
doesn't become too risky
Okay.
or too conservative.
Okay.
It basically forces you
Yeah.
to sell high and buy low,
Okay.
which is
Which is a good thing.
a disciplined approach
Right.
that can actually enhance returns
Oh.
over the long run.
Okay.
Yeah,
It
so it's
sounds
a way
good.
to kind of stay on track
Yeah.
and make sure that your portfolio
Yeah.
is still aligned
point.
with your goals,
With your goals and your
risk tolerance.
risk tolerance. Okay.
Yeah,
The book also touches on
yeah,
choosing a financial advisor.
they do.
What are your thoughts on that?
So they acknowledge
Okay.
that some investors
Yeah.
might benefit from
Yeah.
professional guidance, especially if they're dealing with
Yeah, okay.
complex financial situations.
Yeah.
But they also caution against
Okay.
advisors who charge high fees
Right.
or engage in questionable practices.
So if you're going to work with an advisor.
If you're going to work with an advisor,
Yeah.
find a fee-only fiduciary
Okay.
who's legally obligated
Mhm.
to act in your best interest.
Your best interest.
Yeah,
Okay.
not their best interest.
Got it.
Yours.
And I mentioned they also talk about
Yeah.
importance of protecting your assets.
Yes.
With insurance.
They do. They
Yeah.
do. They talk about different types of insurance.
Okay.
Like life insurance,
Uh-huh.
health insurance, disability insurance.
Yeah.
Right.
Property insurance.
Okay.
They even talk about long-term care insurance.
Okay. Which can be
A tough.
a tough subject
It
to
is.
think about.
Yeah. It's not fun,
Right. But it's essential.
but it's important.
Yeah.
Especially as you get older.
Right, to protect yourself
Yeah.
from
Yes.
potentially devastating costs.
Yeah. Those costs can be
Of long-term care.
astronomical.
Right, as you age.
Absolutely.
So it's all part of having that comprehensive
It is.
financial plan.
It is.
Okay.
Yeah.
Speaking of like a holistic approach,
Yeah.
one area they don't really delve into too deeply
Yeah.
is real estate.
Real estate, right?
They mentioned it briefly
Yeah.
as a possibility for
Possibility for good debt.
good debt.
Right.
But it seems like it could play a bigger role
Potentially.
in a diversified portfolio.
It could.
Right.
Yeah.
So what are your thoughts on that?
So real estate can be a very valuable asset,
Yeah.
but it's also
A complex investment
Yeah.
with its own unique risks and rewards.
right. It's not as simple as
No.
buying a stock
No, it's not.
or a bond,
No.
right? There are so many factors
So many factors.
to consider:
Location,
the property type,
property type,
market
very
conditions.
big conditions, yeah.
So it's definitely an area
That is warrants further
exploration.
exploration, yeah.
All right, so we've covered a lot of ground today,
We have.
but I still feel like we've only scratched the surface
I know, right?
of what this book has to offer.
It's packed with information.
So what are some final thoughts?
Okay. Well, I
Yeah.
think one of the most powerful messages
Yeah.
from the book
Uh-huh.
is that anyone can achieve financial success.
I love that.
It's not about being
Yeah.
a financial genius
Right.
or having a huge inheritance.
Right. Anyone can do this.
It's about embracing
yeah.
those Boglehead principles.
Right.
Saving diligently, investing wisely, managing risk, controlling your emotions,
Yeah.
and taking a long-term perspective.
That long-term perspective.
Yes.
I love that message of empowerment.
It's empowering.
Yeah.
It
It's
is.
a reminder that we have the ability
Yes, we do.
to take control
We have the power.
of our own financial destinies
That's right.
and create the future that we desire.
Absolutely.
Welcome back to the final part of our deep dive into the Bogleheads Guide to Investing.
I'm excited to wrap this up.
I don't know about you, but I'm feeling a lot more confident
Me too.
about my financial future.
It's empowering.
After exploring these principles,
Yes.
one thing that stood out to me was
Yeah.
the Bogleheads' emphasis on simplicity.
Simplicity.
They just strip away
All the jargon.
all the complexity
Some of
of
the complicated stuff.
the investing world.
Yeah, they make it accessible
Right.
for everyone.
And they boil it down to these core principles.
A few key principles.
that anyone can understand
That's right.
and apply.
Yeah, it's refreshing. You know, in an industry that can be so
Intimidating.
intimidating.
Right.
Yeah.
And they advocate for this streamlined
Streamlined approach.
investment strategy.
Yeah, that's easy to manage.
That's easy to manage.
And you don't have to be constantly
You don't have to tinker with it,
tinkering with it. Yeah.
which is appealing to someone like me,
I hear you.
who's not looking to become a day trader
Right.
or spend hours
Yeah, you don't have to be glued to your screen.
poring over stock charts.
Exactly.
So they really seem to emphasize
They do.
that less is more
Less is more.
when it comes to investing.
Yeah, keep it simple.
Okay.
Yeah.
It's about focusing on those fundamentals,
Fundamentals.
minimizing costs,
Minimizing costs, very important.
and just staying the course.
Staying the course.
Yeah, it's a very different approach
Very different.
from the get-rich-quick schemes.
Yeah, all those.
You often hear about.
Yeah, the scams and the.
Right.
Yeah, the risky stuff.
And speaking of minimizing costs,
Yes.
their relentless focus
They're big on that.
on low-cost index funds
Index funds are the way to go.
really hit home for me.
Yeah, they make a strong case for them.
I never realized how much
Yeah.
those seemingly small fees
Oh, yeah.
could eat into your returns.
It's sneaky.
Yeah.
It's like a silent drain on your wealth.
Okay, over time.
Yeah.
So every dollar you save in fees
Exactly.
is a dollar that stays
In your pocket.
in my pocket to compound and grow.
Could grow and compound. Yeah.
So the Bogleheads are really,
They're fee conscious.
they're fee conscious.
Yeah.
They shine a light
They do.
and the importance of that
Absolutely.
when you're choosing investments.
Yeah, pay attention to those fees.
Okay, I think the biggest takeaway for me
Yeah.
is their unwavering focus on long-term thinking.
Long-term thinking, that's the key.
They constantly remind us, marathon, not a sprint.
It's a marathon,
Yeah,
not a
what's
sprint.
that?
And that true wealth is built over time
Over time.
through consistent saving and investing.
Consistent saving and investing. Yep.
It's a message that's easy to forget
It is.
in today's fast-paced,
In today's world.
instant gratification.
Instant gratification, yeah.
Right.
We want everything now.
We want everything now.
Yeah.
So the Bogleheads are really encouraging us
To be patient.
to be patient, to tune out the noise.
Tune out the noise and focus on
And focus on those long-term goals.
long-term goals. Yeah.
And they provide those
concrete
strategies
Yeah.
for doing that.
Like having a written investment plan,
Okay.
automating your savings,
Okay.
and regularly reviewing your portfolio
To make sure you're on track.
to make sure you're on track. Yep.
Okay, those are all
Essential habits.
essential habits.
Yeah.
That can help you stay disciplined
Discipline. Yeah.
and focused.
Focused, even when the market gets volatile.
Even when things get crazy.
Speaking of volatility,
Yes.
the Bogleheads' insights into managing emotions
Managing emotions, so important.
are just invaluable.
Yeah.
They dedicate a whole
Just
chapter
dedicate your chapter to that.
to this,
Yeah.
exploring how our psychological biases
Yeah, our brains work against us sometimes.
can lead us to make irrational investment decisions.
Irrational decisions, yes.
I know, I'm definitely
Yeah.
prone to emotional investing,
I think we all are, to some extent.
especially when the market's just
Oh, yeah.
swinging
Well,
wildly.
it's up and down and all over the place.
Do you have any personal strategies for keeping those emotions in check?
One thing that helps me is just to remember that
Yeah.
the market is always going to fluctuate.
Okay.
There will be ups and downs.
There will be.
But over the long term,
Yeah.
the market tends to trend upwards.
Okay.
So just reminding myself of
Yeah.
that historical perspective. Okay.
Helps me stay calm.
So it's all about perspective.
It's about perspective.
Right, yeah.
Yeah.
It's like remembering
Yeah.
the storm will eventually pass
Exactly.
and the sun will come out again.
That's a great way to put it.
And another strategy that helps me
Yeah.
is to avoid checking my portfolio
Oh, yeah.
too often.
Don't look at it every day.
The more you obsess over the
It is-
daily
yes.
fluctuations,
Yeah, the more anxious you're going to get.
the more likely you are
Yeah.
to make those
Agreed.
emotional decisions.
Emotional decisions.
Yeah, that's something I definitely
I think we all
need to work on.
Yeah.
It's so tempting
It is tempting.
to check those numbers.
I know.
But it often leads to
More anxiety
more anxiety.
and second guessing.
Yeah.
Yeah.
And the Bogleheads' emphasis on
Yes.
aligning your investments
With your goals.
with your goals.
Your risk tolerance.
And risk tolerance
So important.
is really important as well.
It's not a one-size-fits-all approach.
It's not. It's very personalized.
Yeah.
It's about figuring out
Yeah.
what's right for you.
What's right for me.
Exactly.
Right.
Mm.
And finally, I really appreciate their focus
Yes.
on ethical investing.
Ethical investing.
They advocate for
Yeah.
investing in companies
Yeah.
that align with your values
Aligning your investments
and contribute to a better world.
with your values. Yeah.
So it's not just about
It's not just about money.
the financial returns.
It's about making a positive impact.
Right. It's about making a positive impact as well.
Absolutely.
So to wrap up our deep dive
Okay.
into the Bogleheads Guide to Investing,
Yes.
I think the core message is that
Anyone
can achieve financial success.
is within reach for anyone
That's right.
who embraces these
Timeless principles.
timeless principles, simplicity,
Discipline. Long-term thinking.
long-term thinking,
Low costs,
and ethical investing.
and ethical investing.
Yeah, it's a powerful combination.
It's not about getting rich quick.
It's not.
It's about making those smart choices,
Smart
like
choice.
consistently over time,
Over time, yeah.
and just letting the magic
the magic of compound.
of compounding work its wonders.
Yeah, let it do its thing.
And on that note,
Yes.
we're going to wrap up
Okay.
this episode of The Deep Dive.
That's good.
We hope you found it
Yeah.
as informative
As we did.
and inspiring as we did.
Absolutely.
If you're interested in learning more
Yeah.
about the Bogleheads approach,
Yeah.
we highly recommend
Checking out the book.
checking out the book,
And the forum.
exploring the Bogleheads forum online.
Yeah, the forum is great.
It's a fantastic community
A great community.
of like-minded investors
Yeah.
who are passionate about
Sharing knowledge.
sharing knowledge
And helping each other.
and helping others achieve financial success.
Financial success.
All right, thanks for joining us
Thanks for having me.
on this journey.
It's been fun.
We'll see you next time
All right.
for another deep dive
Sounds good.
into a topic that matters to you.
See you then.